Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex, gold and S&P fundamental and technical analysis for the week ahead, starting the 9th of March. Hope you all had a great trading week. And I'm going to answer this question, which I've got quite a few in my inbox and on YouTube, which was basically people are wondering why the euro dollar is bullish after the ECB cutting rates last week, and this gentleman here, Limitless Ambition 2, is confused, which a lot of people are as well. Shouldn't they be bearish when they cut rates because it's getting weaker and depreciating? So I'm going to go into the nuance of this a bit later in the video. So before we get there, just looking at the week ahead, and in the week ahead, investors will closely watch the US inflation rate, producer inflation, JOLTS job openings, and the Michigan Consumer Sentiment Index for insights into the American economy. In the UK, key releases include January GDP growth, industrial production, and the goods trade balance. Germany will also report its trade balance and industrial production data. Meanwhile, Canada's interest rate decision will be in focus. In China, CPI and PPI print will drive the headlines. Additionally, Australia will publish NAB business confidence and Westpac consumer confidence. So lots going on this week. And so, yeah, let's get into really the dollar side of things and why really the dollar is a bit on a decline, I guess, in the short term. And this is the equally weighted dollar index. And as you can see, really, we're kind of pulling back to a bit of fair value. So if you don't know really down here, we saw the dollar rally from September, basically beginning of October. So this is seen as now actually a really, a bargain area for the dollar, and we kind of reached a very expensive area, but up at these highs. And between an expensive area and a bargain or a discount, premiums and discounts, basically is fair value, right? So when we're looking at this immediate trend, we really just pull back to that 50% area, which, like I said, is really fair value. And this was, I think, it was kind of due anyway, because we just had this massive move to the upside, with really no deep pullbacks. So the narrative from a fundamental perspective is that the tariffs may now have a negative effect on the US economy. So it says here the dollar dropped the most since US President Donald Trump took office this year, as concerns about the negative impact of US tariffs on the economy weigh on the greenback, with losses particularly stark against the euro. The dollar adjustment continues at a rapid rate as the market prices the impact of tariffs squarely on the US via growth impact and not on the countries being tariffed, said Brad Bichel, the global head of FX at Jefferies. We are in the midst of a downswing now, and it's unclear how far it can run. So the narrative has kind of changed this week when it came to the US dollar, right? So it was really a buy the rumor effect from September. Buying the rumor meaning that if Donald Trump was to become president, that he would implement tariffs that would then be inflationary, that would cause the Federal Reserve to then hike rates, therefore strengthening the dollar. And I guess at the time, really government policies weren't necessarily known, and so I don't think it was factored in. Now we've got DOGE, the Department of Government Efficiency, and I think that's kind of seen in the short term as a bit of a negative because of the the federal workforce being cut. Unemployment potentially going higher, and so the effect of Trump's fiscal policies haven't really taken place, although at the moment they seem to maybe affect the economy in terms of maybe contracting the economy, rising unemployment, lower employment. And so talking about employment, we did see the jobs report show evidence of labor market is softening, Yeah. So it says here that jobs growth steadied last month while the unemployment rate rose, a mixed snapshot of a jobs market hanging in the balance of quickly changing government policy. Non-farm payrolls increased 151,000 in February after a downward revision to the prior month, according to the Bureau of Labor Statistics report out Friday. The unemployment rate rose to 4.1%. Friday's report is the latest evidence that the labor market is softening while more people permanently out of work, fewer workers on federal government payroll, and a jump in those working part-time for economic reasons. The number of Americans holding multiple jobs climbed to a record of nearly 8.9 million. That sets up a weak backdrop as President Donald Trump's policies raise concerns about the broader economy. Inflation has proven sticky in recent months and consumers are starting to pull back on spending, which, if sustained, may lead businesses to rethink their hiring plans. So, as I said last week, there are cracks starting to show with the US economy in terms of jobs. And so at the moment, jobs, the economy seems to be, there's a bit of fear there. So that's why you're seeing the dollar start to move to the downside. Also as well, you've got on the Fed Watch tool, there have been three price cuts, rate cuts being priced in. One in June, one in July, and you've got October as well. Whereas about 3 weeks ago, 4 weeks ago, there was really only one rate cut being priced in. So again, fears around the economy. This week, the Federal Reserve or the market really kind of pricing in maybe more cuts into the Fed's projections has weakened the dollar, but there is a little bit of light at the end of the tunnel. It says here, Fed's Powell says still no need to hurry to consider rate moves, and so um, Powell was a bit on the hawkish side. It says here, Federal Reserve Chair Jerome Powell acknowledged increased uncertainty in the U.S. economic outlook, but said officials don't need to rush to adjust policy. Despite elevated levels of uncertainty, the U.S. economy continues to be in a good place, Powell said at an event Friday in New York, hosted by the University of Chicago Booth School of Business. We don't need to, we don't need to be in a hurry, and we are well positioned to wait for greater clarity. So, a little bit of pushback from Jerome Powell with regards to whether they're looking to cut rates aggressively or not. Now, this week we do have CPI coming in to play. So I think if CPI remains elevated and not necessarily heading down to their 2% target, then I think actually the dollar could be a decent buy at these levels here. So let's see really what happens. I'm not too really sure if the dollar being an absolute sell, not at all in my book. I think you can find reasons to buy or sell. Also, as well, the rumor really has to have legs, right? It has to be supported by data. So, although the market is bearish at the moment, if CPI comes in and CPI is higher, then that could boost the dollar because then the market may price out the amount of rate cuts that they're currently pricing in now at 3, maybe might reduce to be 2, and then you can get maybe some more upside potential for the dollar this week. So although there is some dollar weakness from a technical analysis perspective, we really only pull back to fair value. You would think that the most recent trend on the higher time frame should still be bullish. And if you're right about the dollar, then this could be a nice buy. Moving on to and that's by the way, the equally weighted dollar index. So we're just using this to gauge overall dollar strength or weakness against the euro, the pound, the yen, the CAD, the Australian dollar, the New Zealand dollar, and the Swiss franc. So the dollar looking, I think, a bit on the cheap side at the moment, but again, that would have to be confirmed with the data this week. Moving on to the dollar yen, and the yen in my book is more of a buy than a sell. So the Bank of Japan are quite hawkish. Inflation is showing that it's rising, and so for me, the yen is more on the sell side. Sorry about this. What's going on here? Let me just change this to uh, a supply zone. All right. So not really a pair that I'm interested in trading, but when we look at the Japanese news channel, it says here that the yen may strengthen to around 130 per dollar on the back of rising Japanese interest rates, according to BNP Paribas Asset Management. Once among the world's hottest currencies to sell, the yen may advance 10 to 15% from current levels as the Bank of Japan hikes rates and the Federal Reserve resumes easing policy, according to James McKelvey, head of global aggregate and absolute return. So really, that's the way that we look to trade, right? We're looking when we're looking at fundamentals and monetary policy, we're looking at one currency, which is in central banks looking to hike rates, while the other is looking to potentially cut rates. So it says here, fears of an intensifying global trade war are also catapulting demand for havens, which the yen will become an increasing beneficiary. So the yen is benefiting from not only risk off sentiment, but also, of course, the potential interest rate hikes. Although being quite small, they're really the only central bank that are looking to hike rates out of the central banks that we trade, of course. So with all that being said, I think the yen is a definite buy. Whereas, is it a buy against the dollar this week? Going down to 130s, which would be all the way kind of down here. That's going to be a massive drop. You would really expect some massive dovishness from the US economy, and for the Fed to really price in a lot more cuts. But I think there are better trades to trade the yen against if I'm looking to buy the yen. But if you are looking to trade this currency, then you can either wait for prices to move back up to a supply zone before going short, or if prices make lower lows, then you're waiting for a pullback into a level of supply before looking at going short. The dollar Swiss. Now, the dollar Swiss, I was stopped out of my trailing stop this, we'll say last week. So that was overall a profitable trade. Now, I'm looking to re-enter into this trade. I don't think the dollar is as weak as, of course, some are saying, but of course I could be wrong. Depends on what the data says this week. But the Swiss franc, although yes, in a risk off environment, I believe that the Swiss National Bank will not want the Swiss franc to appreciate in the way that it has. And so what they're going to do is try to weaken their currency. And so I do believe that within this zone, we should see a buying opportunity, or I'm looking for a buying opportunity. The dollar is still really the one to buy against the Swiss franc. So let's see what happens. Of course, there's been negative sentiment around the dollar, but overall, the dollar is still in a decent place. We also have a nice level of support and resistance right here. Level of resistance, level of support here. So if we come down to the 0.874 level and bounce off somewhere around here, that could also be a nice area to look for some a trade, right? So I believe the path of these resistance is still more to the upside than the downside. Dollar CAD, and the dollar CAD, again, a pair I'm interested in buying. Again, at the moment, it doesn't seem like the tariffs are really affecting the Canadian dollar too much in the short term against the US dollar, but I believe overall that we should see some more upside as I think I think Donald Trump is going to be quite aggressive on tariffs eventually if he doesn't get what he wants. And so you can see what he's, not to get necessarily sidetracked, but you can see what he's doing with the Russia-Ukraine negotiations, being quite aggressive with Zelensky, pulling funding and things like that. So ultimately, I do believe that if Trump doesn't get what he wants, eventually, though, he will be implementing these tariffs. Although he's given an extension until April, I think any pullback should be buying opportunities for the dollar CAD. I do think that if the Canadian government do agree to the tariffs, then of course the Canadian dollar could actually rally a little bit. But as long as there are fears and Canada and the US don't necessarily agree a deal, the longer that goes on, I do think actually the dollar CAD should increase in value. The pound dollar. So again, the pound I think has been really kind of the beneficiary of A, dollar weakness, but B, also that it's insulated a little bit from the tariff and trade wars. So we've seen obviously the pound move to the upside. Now, I believe going into April that the pound may be a sell, and the reason why is because it says here the UK energy price cap will rise 6.4% in April, a third consecutive hike that will make it more difficult to achieve the government's goal of lowering bills for households and businesses. Consumer campaigners are warning about half of adults expect to ration energy use in the coming months, according to polling by Energy Action and YouGov. Households will be squeezed further as average UK water bills are also set to jump 26% from April, the biggest increase ever. The latest hike is a challenge to the pledge that could push more consumers into energy debt, a figure that is already at a record and risks dampening consumer spending. So higher bills are impacting the wider UK economy. The Bank of England expects inflation to peak at 3.7% in the third quarter on the back of the higher price cap. Consumer confidence among UK households has also slipped, partly because of the rising price cap. So come April, not only are we getting rising energy costs, but also as well the government have implemented a tax plan that is going to really kind of hurt businesses as well. So I do believe that the UK is heading into a period of stagflation. So where you have rising inflation but a contracting economy. So I think going into April, I think there's opportunities to look for actually shorts here, especially if there's some short-term dollar positive news, and also as well we do have the UK GDP this week. So if that comes in and this is first estimates, so first estimates are normally quite impactful, and if it comes in below expected, then I do think that the pound could be a decent sell. Pound yen, again with the pound yen, I do believe that the yen should be more of the buy. So again, path of least resistance should probably be more to the downside. If we do get a bit more of a pullback into this fresher area of supply, I would probably look for more sell trades with that in the direction. I don't really think that the pound is a buy, like I said, going into April, May, when the government policies start to take effect. Looking at the euro index, and again, like the dollar equally weighted index, the euro index is a measure of euro strength against the dollar, the pound, the yen, the CAD, the Australian dollar, the Swiss franc, and the New Zealand dollar. And what we're seeing is this week, of course, massive move to the upside. And again, going back to the question as to why is the euro strengthening and the dollar weakening, we've already covered the dollar. So looking at the euro at the same time this week, the reason why the euro strengthened is because Germany's commitment to increased spending has led to a dramatic shift in European markets, with the euro on track for its best week best weekly run since 2009, and the DAX setting an all-time high. Strategists are boosting their forecast for economic growth, corporate profits, federal borrowing, and interest rates, and investors are wagering on faster economic growth, with some predicting the euro could reach $120 in sorry 100 what sorry $120 $1.20 in 6 months. And so at the same time, you're seeing cracks showing and economic worries around the US. Germany's fiscal spending announced this week are now boosting forecasts for growth, right, and less interest rates, which is basically what's happened. You've had a rebalance, or say rebalancing, but I guess a rethink on the amount of interest rates the ECB may be cutting this week, and in fact, the market has priced in less rate cuts for the ECB, and so that's really the main reason why you're seeing this divergence for the euro, right, and on the euro dollar. So the euro's rallied based on a reforecast of economic growth. And remember that when a country is in the growth phase or potential growth phase of their economic cycle, really there's less need for rate cuts. And in fact, depending on where inflation is, central banks will typically tend to hike rates during the growth phase of the economic cycle. So that's really the reason why, going back to the question. And although the European Central Bank did cut rates, remember that cutting rates doesn't automatically mean that the currency is going to go down. Remember that the market has, by the time the Federal Reserve, the ECB has cut rates, that has already been priced in, right? You're not trying to buy on the day or sell on the day, because the market has already priced that in weeks and potentially even a month or two ago, if they can see that data coming. It's buy the rumor, sell the fact. With fundamentals, what you're supposed to be doing is buying the rumor and selling the rumor, right? Going long on the rumor and selling the rumor. And then when the fact comes out, fine, that's, if it confirms the rumor, then brilliant, but the money would have already been made early on, right? And then, many people have heard of, obviously, of course, exit liquidity. Many traders would be used for exit liquidity, right? Because retail traders typically tend to buy and sell on the day. And that's when, if they're buying and retail and institutions want to sell, then of course, the institutions can sell when retail are buying. And I get the analogy that retail is only a certain percentage of the market, but every liquidity, all liquidity kind of helps. So, but this week, that rate cut was already priced in, but now the market is repricing the euro based on new information, right? And that new information being economic growth due to fiscal spending meant that the European Central Bank will actually may not necessarily need to continue to cut rates as aggressively as the market was pricing in. Therefore, those cuts are being priced out of the market. The future cuts have been priced out of the market, or to a lesser degree. Therefore, you're seeing the move higher. So that's the reason why. All right, so fundamentals are still working, by the way. It's just your understanding of what's happening with fundamentals. And again, if you do want to join Trading 180, the mentoring group, and get this in real time, this info in real time, then go onto the website. I think I'm opening probably around the end of April, beginning of May. So if you go to the Trading 180 website, you'll be able to see and sign up then. But where are we now? So we've got a supply zone here. Now, I do think that the euro has definitely had a sharp run. Whenever you have moves like this, quite parabolic moves, again, this has been the strongest move since 2009. You typically get at least some sort of pullback. So you can actually be bullish on the euro, but I do think that we could see a bit more downside, especially if we get some decent news out of the US with regards to inflation. So this could be actually a nice area to look for some short trades. I think a lot of the news now has been priced in. Yes, we've seen that there could be 120 in 6 months. I don't know, that would be all the way up here. That would be a massive move in 6 months. But let's see. I think for now, in the short term, we could see a reversal here. But again, I think that would have to be driven by some news. And also remember that the rumor has started that the German economy is going to grow. Therefore, it will basically raise everyone else's economy in terms of the eurozone. But remember that they still need the data to support that. You can't just start buying the rumor and then the data is showing that, in fact, that's not the case. The fiscal spending may not have the effect that it had been intended, right? So ultimately, if you're looking to buy the euro now, you'll definitely need to see the data confirm the narrative that the euro is a buy. So that's where we are with the euro dollar. I do think there's sells. If you're looking for buys, then at the moment you'll need really either price to pull all the way back down here, which I don't think is going to happen anytime soon, or you need price to create demand zones, right? And so at the moment we've got this area here, right there. That's a bit too high for my liking, but if you do want to be a buyer here, then that's where we are. Or if you're looking for, a deeper pullback, and then you're looking for price to kind of create a bit of a demand zone before moving to the highs. Euro yen. So I do think the yen is still a buy. Would it be against the euro? I'm not so sure anymore because, of course, the sentiment. I still think that the yen has the edge, but I'm not so interested in this pair anymore. But if you are, then I do think there's an opportunity to look for short trades. Not the greatest because opportunity, because you've had this level been touched once, twice already, and the more times an area has been touched, the weaker it becomes, and so less of a bargain it is. So I do think if you're looking to get short on this, maybe a pullback up into the 16250s should be a better area before looking at going short. All right, before looking at going short from there, around there. Also, as well, there is the opportunity for those of you who know how to trade stop hunts, probably somewhere around here. I think just above that area should be decent for a stop hunt. Euro pound. So euro pound again, the euro's rallied against the pound. Again, not really a pair that I'm interested in. I think both are pretty now even when it comes to their economies and the fundamentals. Of course, actually, I think maybe the pound may have a little bit of the edge currently, but again, as I said, I think the pound could be actually a bit more of a sell come April. So I think actually any pullbacks should be nice opportunities to buy. But again, I wouldn't buy I wouldn't sell the pound against the euro. I think there was maybe some stronger pairs to buy the buy against the pound. So let's see what happens. But technically, we're in a bit of no man's land. The nearest demand zone is going to be down here. If you are looking for short trades, then you've got, you're planning on buying the pound, then you're looking at a short trade up into this level here. But I think over the next month or two, we should probably see a bit more upside as the pound, I think, starts to sell off. Australian dollar, US dollar. US dollar has obviously sold off. Even in a risk off environment, we're seeing weakness, but we should see. I do like the Australian dollar as a buy in terms of the fundamentals, but just from a risk sentiment perspective, it is suffering a bit. So I do think that this one's a bit more of a trickier trade. I think you can look for buys or sells. If you're looking for sell trade, meaning to buy the US dollar, then I think that's going to be a nice area to look for buys. If you're looking for a sell trade, then really a pullback into that demand zone there before looking at going long. But from a risk off perspective, the dollar should really be the the currency to strengthen. But if we do get a bit more risk on sentiment, then I think the Australian dollar should be a buy. Again, would I buy it against the US dollar? Probably not. I think I'd buy it against something like the New Zealand dollar and some other weaker currencies like the Swiss franc. Looking at gold, so gold did bounce off of this area of demand last week, and again with fears around the US economy, fears around just risk off sentiment. Again, I do think that gold should continue to remain to be a buy. So really, any pullbacks into that zone, I would prefer prices to come a bit cheaper, but this is now looking like actually a really nice area to look for a buy trade for gold. Can't really see gold being a sell currently. The S&P, a bit more interesting. So you're probably seeing a lot of headlines talking about the S&P crashing and what's going on in the market, when really in reality, when we look at the percentage that it kind of pulled back, is only really about 7.88%, which really isn't anything when you consider the past drops. We see that that was about a 10% drop right there. When we see some of the biggest drops in the market, maybe from this high to this low, that was around about a 27% drop before we eventually recovered. You can see during COVID there was a drop of about 35%. So fears of an economic crash or a market crash. Of course, we're definitely due a pullback, correction, however you call it. And if we are to go into those kind of 20 to 30% pullbacks, then you're probably looking at somewhere around the 5,000s. That's about an 18%. 4,200 would represent about a 32% drop. But how is it going to get there, right? Is it going to drop like a stone? Is it just going to drop massively? I really don't think so. I would still have a bit of a positive view on the S&P, especially if the Federal Reserve are continuing to cut, because from a macro perspective, whenever central banks are cutting rates or in their cutting cycle, the stock markets typically do tend to make higher highs over the medium to long term. So this is just a buying opportunity. If you are looking for buys, will you buy now, or will you buy if prices come down here? If prices never come down here, you don't, and you buy here, then it is what it is, right? But ultimately, nobody knows what is going to happen, but I do believe that the stock market is still a buy. It's just maybe waiting for sentiment. So again, fears around the US and the economy, may basically cause the S&P to kind of drop a little bit, but I do believe that that will cause the Federal Reserve to end up cutting rates, and then from a rate cutting perspective, eventually we'll find the bottom, and then I think the S&P is more of a buy. But if you do want to be a seller, if you want to be a shorter of the S&P, then these are your areas to look for some sell trades. There are wide areas of supply, so what I would say is that within those wide areas of supply, look for areas of support and resistance within that area, right? So you can see here, you've definitely got a level of resistance here, support, bit of support there, a little bit of resistance. So if you're looking for a trade to the downside, a pullback up into this 588 area will be seen as a decent area to look for some sell trades. And so that brings us to the end of the weekly analysis. Trade updates. Now, I haven't really entered into any trade updates, any trades this week. I did miss a trade on the New Zealand yen, so which was actually profitable. I know some traders ended up getting involved in this and making some money. They were quite happy with this, and so prices basically came back to a supply zone, an 80% area supply zone, and then they ended up taking some trades around here, got in on some pullbacks, ended up making profit on that. So well done to them. So that was the trade that I ended up missing this week. Fundamentally, the yen is really the buy, and the New Zealand dollar should really be a sell. But just to update you guys on the on last week's trades, and you can go to last week's video to see my entries and the other information. This is just going to be really on just an update. So remember last week I said I took 80% off of the trade, so I really only had about 20% running, and then my stop loss was up here, ended up being stopped out on the New Zealand dollar US dollar for a very tiny I think it was a profit, matter of fact, on this. So overall, yeah, this trade was a very nice trade, as I think I'd entered somewhere up here, and then I trailed the 20% really around down here, so below my entry point, which would have been a profitable trade, a small profit, but overall a very nice profitable trade. So I'm out of the New Zealand dollar US dollar. The dollar Swiss ended up stopping me out on a trailing stop. So remember, we got in around here, trailed my stop up, and then this week we basically ended up being stopped out on a trailing stop. And again, this was a profitable trade, a profitable trailing stop. So overall, this whole trade was a profitable trade. And the Australian dollar, New Zealand dollar, a couple of small losses. So I basically entered into 4 positions, ended up taking profit on 2 full positions, and then when I got stopped out, these were basically smaller losses. So again, overall, the trade idea was a profitable trade idea. So because my original stop loss was actually 15 pips below here, so as I moved it up here, I reduced my losses on those 2 open positions. And so yeah, 2 full wins, 2 small losses means an overall profitable trade. So that's really where I am this week. So I'm flat. No new trades last week, but hopefully I can get into some trades this week. So yeah, that's it for this week. Hope you enjoyed the analysis, found it useful. Take care, and I wish you all a great trading week.